Big loser of today has been Hindalco. Multiple downgrades have come in on the stock after results from Novelis. Nigel is here to break all of that down for us. Nigel.
Well, that's right. Hindalco got knocked back in today's trading session as its arm Novelis, posted a mixed quarterly set of numbers. The volumes were almost flattish on a year-on-year basis, but the EBITDA showed some sequential improvement even after taking a net tariff hit of close to around $54 million. The management, though, they say that the tariff mitigation efforts, they're underway, and that could start showing up in the results from the second half of the year itself. But the real concern is the fire at Novelis' Oswego plant. The company expects the impact to show up in the second half of the year, which means that the second half will be a washout. The cash flow hit could be close to around $550 million, and the EBITDA loss could be around $100 to around $150 million. Though they expect 70 to 80% recovery through the insurance, but that in all probability will only come in FY27. So near-term pressure on the balance sheet and the cash flows, well, that's something that the street will have to bear. Additionally, the net debt as well came at its highest levels we have seen in the last 21 quarters or thereabouts. That's what's prompted parent Hindalco to step up with around a $750 million equity infusion into Novelis. The biggest negative, though, is the Bay Minnette expansion project. The cost has doubled from the original estimate, and the management says that inflation as well as execution challenges, that's what's led to this Capex moving up. At the new Capex, well, the returns will be muted at just around 6% pre-tax ROCE. Even if Novelis hits, that's the $1,000 per ton EBITDA guidance that they have been talking about. So the return ratios get diluted massively. And that's reflected in the street's reaction, right? You have Investec, you have Axis Capital, Nuvama, Equaris, all of them have downgraded the stock. They're citing rising cost, rising debt, the cost overruns, as well as the near-term earnings risk. Explains why stock is smacked today.
Among the top losers on the Nifty, Nigel, thank you for that update. As a slight recovery from the lows for Hindalco, if you could call it that. Still 6.25% lower on the stock. The other one, though, after their second